Market crash 2018. Take advantage of the market crash before it takes advantage of you. In this video, I'm briefly listing 5 reasons. There's actually a ton more reasons than this, but I'm just touching base on 5 reasons why market crash at some point in 2018 is a definite possibility. Number 1, we keep hearing how great the economy is. And, I have to give it to Trump. He's doing a great job selling everyone on the idea of how well the economy is doing. However, that's not the case. And here's why. They're making these crazy predictions. And so just a couple of examples here. At the end of 2017, they were saying that the economy was grow by so much, and this and that. And this is exactly what it did right here. Same thing is happening with the projections from Atlanta Fed for the first quarter of 2018. They were saying something crazy to the extent of 5.4 just a couple of weeks ago, and immediately, as you can see from this graph now, they are lowering it to 3.2, which essentially is probably going to be revised to a much lower number as we seen right here. So, and it's crazy that nobody is paying attention to simple things like this. Now, how did we miss this? Last year, when everybody was saying how great the economy is, so if the economy is so great, then explain this to me. Why are so many businesses closing down? I got a picture, year-to-date 2017 major U.S. closures announcements, okay? Up 229%, include the list of these companies right here and the number of store closures, okay? You're going to say, well, okay, that was in 2017. Well, that wasn't even everything, okay? It turns out, as the data comes out in 2018, that there were actually a lot more stores that were closing in the United States. And out of roughly 2,500 stores that did close in the malls over the past year, excluding department stores, about 980 weren't publicly announced. So this picture right here and these numbers do not even represent all the store closures that actually took place. Now, if you turn on the TV and you keep listening to all this nonsense, this is what they're saying. Well, all of these stores are closing because of Amazon. Amazon is the culprit. Now, what is this? Just pulled up this is fresh information, and it was everywhere. Amazon is laying off hundreds of employees as of February 12, 2018. Now, as the recording of this video, today is the 21st, so this was literally 9 days ago. So, what's going on? So, apparently Amazon is also laying off workers. So, where exactly are we heading and why? How bad exactly is this situation? Now, everybody was hyped up about lowering taxes and how Trump is great about lowering taxes and he's doing such a great job. Well, he forgot to mention that as he was lowering taxes for just a few rich folks in America, that shortly after that, he was going to raise the taxes for the rest of the population. He's been a strong opponent of this 25-cent gas increase, which, as you know, will absolutely affect everyone, because everyone is using gas to get around, go to work, and get stuff done. So the money that he actually gave to some people, depending on their bracket, really didn't amount to a whole lot. We actually have seen some crazy tweets from Senator Ryan coming out trying to calculate some of those tax savings for people, which were really resulting in $100 a year. So what do you think is going to be greater? The savings of the tax breaks that create to an average American around $100, which by Mr. Ryan was compared to a savings equivalent to a Costco membership, or the 25-cent gas tax increase, which is going to, I would say, for an average person, take at least a few $100 if you drive a lot, over the course of a month or a couple of months out of your pocket. So the point here is lowering taxes, okay, was just a complete waste of money. And mainly I say this because the way the corporations are actually using the tax cuts, yes, they're increasing the minimum wage, yes, they're giving out the bonuses, but you have to understand a simple fact that that stuff is not going to last. As they increase the cost of minimum wage and all those things, they're actually increasing the cost of doing business, which is fine as long as your sales are consistently going upward. The moment your sales are slowing down, okay, that is going to result in massive layoffs. Just think about it. There were people that were getting pay increases from, $9 an hour to, $13, $14, $15 an hour. Well, if you take that money, you could have literally, and averaged out between 3 people, you could have literally hired an extra person, but instead you just simply gave out pay increases which were not tied to production, period. So, in other words, corporations simply took the money from tax breaks, gave it to people. It was not tied to the production at all. So, in other words, there's nothing more produced. People just got a pay increase. In other words, you didn't do anything extra at work. You didn't produce any more. You were just given a pay increase basically for nothing. As a result, the company did not increase its production. So the moment the company's sales are going to slow down, you're going to be fired. Simple. So yes, short term, are people going to use that money and go spend it? Absolutely. And this is exactly what they're going to do. They're going to go buy a bigger car. They're going to go max out their credit card because they're going to go to Hawaii on a trip that they've been thinking about for a while. So they're going to go buy a nicer house. They're going to go buy a nicer apartment because now, they're making 30, 40% more and they're getting this extra bonuses. So they're going to go spend that money. And it's easy to spend money that you really haven't earned due to increase of your skill or productivity. So it's the same thing basically as winning the lottery, okay? And we know what happens to people that win the lottery. They win the lottery, within a couple of years they're broke. So this pay increase is not tied to productivity, which means the productivity of society or country as a whole is not going to increase. And the moment there's any slowdown in the economy, the companies are not going to be able to maintain those wages and those pay increases that they just given to their employees. On top of that, now we're facing this potential tax that's going to affect everyone. And it's going to be felt by families throughout the country every single day, every single week, because now you got husband and wife going to work, and guess what? Before they go to work, they're going to have to stop at the gas station. So the outcome of that on the household income, in combination with already rising gas prices, will definitely far exceed the income taxes that were recently lowered. And let's also keep in mind that they were lowered just temporarily. So everybody's excited about the growing economy while businesses are slowing down, while the economists keep raising and shortly afterwards lowering the economic growth estimates for the United States. Now, that's not everything. What else could possibly bring the stock market down? Well, any possible geopolitical event with Iran, North Korea, Russia, China, and the list goes on is way overdue for the 2018 and can break out anytime. Now, in the past few years, thank God we have been able to avoid that, but it is not to say that something is not on the verge of happening potentially anytime soon, something that someone does not expect, or a black swan event. And ton of reasons here, but I'm just going to combine one as reason number 5, as we have witnessed on February 2nd, as the derivative markets were crashing and as many traders were consistently betting on the volatility index as they were shorting the volatility index, and finally the trade goes badly for many involved when the short volatility index crashes 90% in less than 2 minutes on February 4th, right after the market close. Now, the derivative market crisis has just started. There's been a ton of derivative products that have been developed that people do not understand, and there's trillions of dollars that are invested in those products. We can literally compare this to the derivative market crisis that we experienced in real estate in 2008, where they were packaging bad loans with good loans and rating them as AAA loans. Now, it's a slightly different example, but the bottom line, it was a derivative, that product that eventually collapsed because it was not properly rated. A lot of derivative products on the market right now, they're simply misunderstood and for that reason represent a high risk possibility as well. Now, everybody heard about the student loan crisis. Student loans are at their all-time high, reaching 1.5 trillion. Credit card debt is at all-time high, reaching 1.3 trillion. Margin debt borrowing to buy stocks, and now even Bitcoin using credit cards, home equity loans, and margin capabilities from the actual trade and exchanges can only be compared to the extent of margin debt borrowing to buy these risky things in 1929. The margin debt reached its all-time high in the United States right in the summer of 1929, right before the market crashed in the fall of 1929. And of course, government has not been setting a good example to an average American, as the government debt and deficit is reaching its record highs as well, and currently is beyond a manageable point. So try to combine all those things. As the sales for companies slow down, and as the cost of credit, because of the rate increase that we're going to see this year, who knows, 3, 4, maybe 5 times, maybe instead of a quarter point, rates could go up by half a point at times. We're going to find out that over the next couple of months. As we're seeing this, one thing is clear. Everybody is maxed out, including the government, including the students, including the students' parents, including the grandparents. The entire country is maxed out. Now, some of these products that they're already maxed out on, they are variable interest loans, which means as the rate increases, so will their monthly payment on their credit cards, for example, will also go up. Now, some people already have a hard enough time making those payments, so it's pretty clear to me that the defaults will have no way to go but increase and significantly go higher over the course of the year as a result of the rate increase. Now, not only that, a lot of corporations are not prepared for this rate hike increase. And of course, just like individuals, a lot of corporations, due to the low interest rate environment, has gone out and they have borrowed an insane amount of money, which at the time seemed like a good idea. Well, why not borrow the extra money? We don't really need it, but hey, we're going to use it because the rates are just so crazy low. Let's just take advantage of it. So now a lot of them are going to be faced with paying a higher interest rate on those loans. And any percentage increase on those loans will literally put thousands of these corporations and businesses out of business. If that is combined with sales decreases, we will find thousands, hundreds of thousands, possibly millions of people in the unemployment line. And when this happens, it's going to be too late. So don't let the market crash take advantage of you. Do something about it now. Visit my site at marketcrash.money. Get some information on some other reasons why the market crash 2018 could be a possibility, why another Bitcoin crash could be a possibility. But more importantly, how can you profit? As you know, every time market crashes, and we'll just take the two most recent crashes, the tech bubble in 2000 and the market crash, of 2007, 2008. A lot of people lost money, but it doesn't have to be so. See, technically, nobody out there is teaching people that you can actually make money when the markets do go down, and at times it is actually easier to do than the markets go up, because the markets fall a lot faster, so you can make a lot more money in a much shorter time frame. So why fall a victim of a possible market crash when you can take advantage of it? As you probably know, this is how the country's most affluent people have created their wealth, including Warren Buffett, because they take advantage of the market situations. They don't just trade the markets on the way up, they trade the markets on the way down, and then they use the profits that were created as a result of markets going down. They use these profits to buy stocks when they are at ultimate lows. See, as an individual, a lot of people just simply use the strategy: buy the stocks, keep them, wait till they go high, sell them. Okay? But a typical individual doesn't know when is a good time to buy and when is a good time to sell. So just like a lot of people that were getting excited in January, they got into the stock market right before it crashed. They didn't know. It was not their fault. They didn't know it was not time to buy, but it was rather time to open short positions to profit from the market fall. So if you don't know how to do that, visit marketcrash.money, click the How to Profit button, schedule a consultation. We can put together a nice strategy how you can take advantage of the situation, or at least protect your stock market investments, your cryptocurrency investments, because as you know, Bitcoin does fall. As you know, good stocks do fall. Even stocks like Amazon do go down. Even stocks like Apple and Microsoft, they all fall at times. And because they are owned by almost every institutional investor, those are the stocks that actually have a much higher probability of falling, because when everybody heads for the exit, everybody has to sell. And when everybody sells at the same time, creates very profitable opportunities if you know exactly what to do and when to do. So if you're looking to profit from this market crash, visit marketcrash.money, use this link right here, How to Profit, schedule a consultation, get on the phone with me one-on-one, and depending on your goals, we will come up with a solid strategy that will not only keep you profitable through the bad times, but will even help you and your family prosper. Thanks for watching the video. I hope it was helpful. Catch you on the next one.